Hello and welcome to the New Jersey Bank Marketing Association video podcast. In this episode, we'll hear from Peter Crowley, president of Bank of Princeton, about the experience of starting a de novo bank in New Jersey. This program was recorded December 6, 2007. Now let's go to the lectern where Jane Gore of Amboy Bank will introduce the program.
Peter tells me he just opened his bank in May, but it feels like he's been there a long time. It is the sizzle of Princeton. I happen to live there and sort of added a little excitement to town, so thank you. Peter Crowley is our next speaker. He's president and CEO of the Bank of Princeton. He spent 25 years as a senior banking executive working in all various aspects of commercial, retail, and investment banking, and it's fun to see a bank president that has experienced all that. He was a senior vice president of Bank of America's commercial middle market banking. He was responsible for leading the Bank of America's professional service business in New Jersey and Pennsylvania. I think it'll be fun to watch Bank of Princeton, and I welcome you today and see what you have on the calendar for 2008.
Thanks, Jane. Thanks for inviting me to speak. In thinking about what to talk about, I'm not a marketing person, and I'm clearly not an economist. And John covered that as well as Dr. Seneca. What I thought I tried to do is maybe give you an idea of what we went through in the last year and a half putting together our bank, why we did it, why the business climate that we have now made it advantageous to us, and a little bit of sort of behind the scenes of what we went through to get to where we are today, which is open for going on 8 months. We'll open our second branch in Pennington, which is sort of the western part of our market, in about 2 weeks. We'll open our third branch, which will be Hamilton in March, April, which is sort of the eastern side of our market. And then we're going to sort of fill in over the next couple of years. So I thought it might make some sense just to give you an idea of what we went through. Also in my discussion with other de novo bank presidents and CEOs, there are some consistent traits that go through what we find as being the issues and the challenges that a de novo bank goes through in both the business climate and, in fact, in the fact of getting ourselves set up. So if I can do this here, let's see if I can do as good as John. Now, you notice John had good slides, color slides. That's I get a marketing guy. In a de novo bank, when I turn around, I'll be the marketing guy. When I turn around, I'll be the president. When I turn around, I'll be the cleaner. So in a de novo bank, you really understand, how impactful multiplicities of what you do are, and everybody who works for us has the same issues. So where do we start? Any good plan starts with the design. And in our market, Princeton had a very unique opportunity. There were 4 very well-known community banks 10 to 15 years ago. And clearly in the last 10 to 15 years, they have all been purchased. And they weren't purchased because they weren't doing well. They were purchased because they were doing well. And in Princeton, it's very unique. There are restrictions for new banks coming in. So a lot of the banks that wanted to open up in Princeton had to buy a bank to get going. And they were bought by regional banks, and then they were bought by national banks. So what you now have is our main street going down through Princeton, starting with Chase on one end, with Bank of America, PNC, Wachovia, ending with Commerce on the other end. So there were no community banks. And we thought the market really cried out for the ability for a community bank to come in and start moving forward. The challenge that we looked at is, as John sort of alluded to, in the last 20 years, banking has changed dramatically. There were 15,000 some odd number of FDIC-insured banks in 1987. I went back a little farther than John did. But there's about 8,000 today, so half of them are gone. But the branch side of the business has increased dramatically. There's 90,000 branches. So what we saw was a continued focus on large banks branching out, removing local decision makers, and almost removing the fact of who you were banking with. So what we looked at when we started was, what was the key drivers of our market opportunity? And we found household income was clearly the biggest driver for us in the Princeton marketplace. It's sort of a homogeneous region between west out to Pennington, Montgomery, the Windsors, and then the Hamilton side, which you get a little more blue collar. Those all were the key drivers for us. The population dynamics are pretty stable down in our market. We don't have tremendous changes. We've got a sort of a floor on some of the housing market because of the companies that are down there, Merrill Lynch, Bristol Myers Squibb, and of the pharmaceutical companies. Plus, Route 1, as well as some of Route 31 in Hamilton, has really become a catalyst for professional service firms and for high technology firms. So we felt that was a real opportunity for us. We also look at the economic and market conditions. And, you know, you're never going to know when is the best time to pick a bank to open it. But we did see a market that was going to be contracting a little bit. We didn't think it would contract as quickly. We did not anticipate the subprime market being this much of a problem. But we did see a market where we thought there'd be some change in the market. As John alluded to, we had Yardville and PNC in an in-market merger, which is the highest correlation for a de novo bank to acquire new business. If you're going to look to say, what's the best way for a de novo bank to start, be in a market where there's an in-market bank acquisition. Because if it's out-of-market acquisition, clients tend to stay with that particular bank and may make a decision later on. And in-market really poses challenges because in many cases the acquiring bank has been exposed to customers before, and customers, for whatever reason, may have not chosen to go that way. So this, we think, is one of the key drivers, and we're not sure what's going to happen with the merger with TD North and Commerce. But again, those are things that help a de novo bank. The toughest thing we faced when we were looking to start was how do you get a client to come on over? Because you don't want to be living on a price a benefit where you're the highest rate in town, and that's what brings them over. But it's constant change, and as John mentioned earlier, we don't expect that to change either. So there's a life cycle for banks. The reason why you're seeing community banks starting up, and there were 14 in 2007, is because there is this growing need for personal touch, high levels of service in the banking side. Interestingly enough, the challenge we found was available locations. Someone mentioned that earlier. Chase comes down and drops $2 million and buys a property without blinking. Citibank comes down and drops money. De novo banks don't have that kind of money to start. So our biggest challenge to start was where are we going to locate? Because it doesn't make a lot of sense to locate in a very off-market location unless you've got a significant driving of small business. And you need traffic. So one of the challenges we face is where we locate. We're lucky we're able to locate in downtown Princeton, and now we've been able to locate in some very high traffic areas. So from a marketing point of view, that's a key thing that we faced. Go to the next step here. So how do we define, we sort of knew we wanted to start, we knew what our market was like, we had to develop our core business plan. And that was defining our bank model. We had a lot of discussions about that. What were we going to be? Were we going to be a strict business bank? Were we going to be a internet bank? Were we going to be a pure consumer bank? And that was a very large discussion with myself and the board for a number of years, months. It's easier in some ways to do one model versus the other. What you can't do is be everything to everybody because your cost to acquire, let's say you want to be a trust bank. If you want to be a trust bank, your cost to your high net worth clients take a different type of individual. You don't need a lot of lower end cost folks. If you're a consumer bank, you may not need a lot of higher end cost folks. So you really had to balance that off. We had to develop our growth projections. That's somewhat tricky because you can look at historical aspects of growth, but it really is dependent on where you are and what you're going to be offering. Staffing needs. I'll tell you, it's the interesting thing with the de novo bank today is, and I'll talk about it a little bit later, is the challenge with regulatory issues. Before you could bring your staff in and they would be customer focused. The challenge today is to not become back office focused between all the regulatory issues that you've got to face when you're building a bank. Product development and marketing strategy were actually very interesting for us because you really need to carve out a competitive difference. And, you know, we've started that by having the name the Bank of Princeton, but we're still trying to put that in. What is our what do we offer to firms that is unique? And we spent a lot of time doing that. We are very fortunate in that because of the technology today that banks have, we can roll remote capture out. We can roll courier programs out. We can actually roll out payroll cards, things that traditionally small community banks could not do. So that's become a very key part for what we're positioning ourselves in. You know, we don't have a marketing department per se, so it really is the board of directors and our customers who give us a lot of feedback on what to do. Two emerging trends that we absolutely see in de novo banking, though, and any banking, are electronic banking and the electronic movement of funds. It puts us on par with larger banks. And that's a challenge that in the past has been difficult to attain. So if we walk into a customer and they're at Bank of America or they're at Citibank or they're at PNC Bank, there's no competitive benefit that that bank can offer that we can't offer. They may have a little bit better website, they may have a little bit better cost structure on the remote capture, but we have that ability. So it really becomes a level playing field, and that's been a very important part of our bank going forward. The next thing we sort of looked at after we built that and we had that put together was we knew what we were going to do. We had our model. We knew what our unique marketing strategy was going to be is, how do you raise cash? And we were very fortunate in this. We were able to go out middle of last year with our market plan and our strategy, and through a series of 4 sort of town meetings with local folks in the Princeton region with our incorporators and directors, we did not have to go to brokers to raise money. We actually raised internally about $30 million in capital. To give you an idea, 5 or 6 years ago, and I don't know if some of the people are still here. I know Barry Duval was here earlier. I think he had to leave. You could get a bank going pretty strongly for $6 to $8 million. Today that's difficult because the cost of getting startups. So you really want to look at probably 12 to 15 as being a good core, and with 30 it gave us a lot of flexibility. It also gives you flexibility in your lending areas because you can lend more based on your capital. But each state had different rules. The thing that we found was interesting was in New York State, if you raise capital, you have 90 days to raise it in. If you don't raise your money in 90 days, you can't open. In New Jersey, you have a lot more time to do that, but if you tell someone you're going to raise $15 million as your minimum capital, you cannot raise that, but you raise 13, they won't let you open. So you have to really think this process through of how you're going to arrange for money. In this whole process, as you establish your capital goals and raise capital, your shareholders and your directors become absolutely important. So if you're thinking of de novo banking, when you start, that core of people, and it was 20 people in our cases, became our driver to bring in that capital. And it became our most efficient channel to both outreach our bank, and then once we opened, to outreach for customers coming in. So that money coming in from them and that referral network is just absolutely key. So then we decided the next case was, what kind of charter do you have? And the charter we chose was a state charter. Most banks today are choosing state charters. The reason being is you're not in the bottom of the pecking order if you go for an OCC charter. And actually the state, because their funding laws have changed, are more apropos to work with you today and really be a partner with you as opposed to fighting you. So what we found is you still have to become FDIC insured. So there's still a long and lengthy process of due diligence. It takes about 6 months to go through all the due diligence that these organizations put you through. Each director, each incorporator, each officer of the bank has to be vetted. And I'll tell you, they go back, for me, almost 20 years and checked where I went to high school, where I went to college, things I did. And if you have a blemish on your mark, you will not be with that bank. That's one of the things the FDIC and the state is very keen on. They are very focused on. There has been a lot of de novo banks starting up in the last couple of years, and there was a concern from the FDIC, I believe, that there wasn't a lot of talent going in. It was just people going in with banks because it was the thing to do. They've been very careful on that. Planning your approach to regulatory oversight, absolutely key. If you're going to be doing a bank today, or even of you who are with smaller banks, regulatory oversight is the absolute 800-pound gorilla. If you don't put effort against it, if you don't put time against it, it will absolutely kill you. We've had 2 visitations from the state in our first 7 months. We've had 1 visitation from the FDIC. These are not full audits, but they come in and say, are you on the right track? Are you doing things well? And they will tell you, if you don't work on your BSA, on your anti-money laundering, your Patriot Act areas, they will give you a memorandum of understanding or close you down. Forget how profitable you are or how well you're doing. So absolutely key you do that and go forward to make that a part of what you're doing. And then what's your physical infrastructure? Who's your core processor, which is the key guts behind the bank? And your training, how are you going to get the people trained once you bring them in? Staffing, product mix, and technology. So those are all the key things that you find in building that infrastructure of the bank. So when you're open, which is what we did in May, after 10 months of fundraising, of building, of reaching our milestones, you get to look and struggle against the challenges of, how do you grow your assets? How do you maintain your margin? John mentioned margin has shrunk shrinking it actually is. We're finding the larger banks who we really challenge to bring balances, challenge their customers to come to us, have artificially kept their deposit rates high because they don't want to lose their balances. So it makes it tougher for banks like ourselves. You struggle with net income versus profitability. Do you become profitable sooner, or do you put the investment into your bank to become profitable later, or build your market value and your franchise value? How do you fund your loan opportunities? You clearly can do it from deposits, but if you're not going to get deposits, do you go out and borrow from the Federal Home Loan Bank Board? Do you borrow from a correspondent bank? And those are issues that we have to face ongoing, especially in scenarios where it's tougher to raise deposits. Market volatility helps us. I will tell you, what we have found is no one wants to ride that white-knuckle roller coaster back and forth. So we have found individuals that I'm just tired of the market. I want a safe investment. I want to know the community bank, and that's where we're finding some of our opportunity. And again, I mentioned earlier, you have to have your shareholder and director involvement driving that business forward. If you don't, you're going to have problems. Again, I just want to touch on one of our first-year challenges was regulatory oversight. We've had internal auditors, we've had external auditors. There's costs to that you don't normally anticipate. At least I didn't anticipate when I started going on this. There's compliance. We've hired a compliance officer full-time after 6 months because we've grown so fast. We'll be probably at $65, $68 million in assets after 7 months. One point here, risk rating criteria. If you ever get involved in starting up a de novo bank, the biggest challenge is not putting the system and regulatory in, it's maintaining it. It's every day going in, every week going in, and that's what the FDIC is going to look for. Not did you put the structure in, are you maintaining it on an ongoing basis? Now, you're doing all this while you're also trying to build balances, grow your deposits, and keep your customers satisfied. It's a challenge, so trust me. But there were key lessons learned that we came through in our first 7 months, and I will tell you, the biggest thing we learned is people are our most important asset. We have 17 people that work in the bank right now. They do 34 jobs. It's unbelievable what they do, and it's a tribute to their passion for community banking. Don't try to accomplish everything. Probably the biggest thing that caused banks to be running in too many directions. Understand what you're going to do, focus on it, and don't diverge from that path. Celebrate when you get a chance. There's not a lot of time to celebrate, so we make a point of trying to find ways to thank our customers for one, but our staff for another, and just recognize that we're working so hard, 12 hours a day. Step back and realize how much we've done. Have a long-term marketing strategy, but be willing to change it. That's absolutely key. You can't get stuck in that rut that this is where we're going to go, come hell or high water. You have to make that strategy change. Realize everyone you meet is a potential customer. And boy, I'll tell you, it's like running your own business when you do this. If you're at an event in the evening, if you're going for coffee in the morning, you're selling your bank, and our staff sells their bank too. John mentioned customer service. It's gotten tougher because the larger banks clearly are looking at being customer service focused. The good news is, in our mind, is the more electronic they become, the more remote they become, the easier it is for us to be involved in the community. And lastly, if you're going to ever go into a community bank, exhibit a passion for it. I will tell you, I've been in big banks and smaller banks. Boy, you live this. You absolutely live it day in and day out. And if you don't like that, don't do it. If you find that you have that passion for the community and the passion for people, I think community banking, once you've been exposed to it, especially with the changes going on in large banks today, and it's a great way to go. And we've found that most of our clients, and again, we've got about, give or take 800 accounts in the first six or 7 months, probably 450 clients because there's multiple account holders, are now becoming our biggest advocate and referring people. We had it's funny, you take little successes, and I'll end with this. I had a call yesterday from a brand new company. I won't tell you where because Jane's going to get mad. It's close to her. Who called and said, yeah, gee, we're looking for a brand new bank. They're spinning off from a company. We heard about you. Someone mentioned you. I'd like to talk to you. When can you get there? I said, where are you? And I'll be there in 20 minutes. And that's community banking. And, we'll bring you the decision maker to make the decision. We basically sat down, signed off on what he wanted. He said, that was pretty easy. And I said, that's the way we try to make it. So that's community banking. That's sort of our story and what we went through as a bank in the last year and a half. And thank you very much for giving me your time. I appreciate it. Any questions? Again, any questions, please?
What was the name of that bank?
I'm not going to tell you. You get mad at me.
I've heard a lot of stories about community banks being started over the years, but what was the driving force in starting your bank? Was it the people with the cash, the money who wanted to create a bank, or was it, how did the idea start?
It's interesting. The idea started by two different groups coming together. One was a group coming out of the first Washington Fulton merger, where some of the directors had left and said, gee, we want to start a bank, and Princeton was a good market to do it. They lived in Princeton. There was also a second group who had owned some property in Princeton that they were trying to build a jazz club, believe it or not. Didn't go through, and all of a sudden the owner, the gentleman who had come out of Warburg Pincus in New York, who was our chairman now, had about 4 banks call where they wanted to buy his property. And sort of, what do you want for it? We'll give it to you. He said, well, that's sort of crazy. Why do they want it? What's with banking? And he happened to know the other gentleman, and within a month or two, they got together, sort of combined their resources, and that's how it started. It was interesting. And the unique thing was, people had tried to build a bank in Princeton for the last 10 years, but they were not Princeton individuals. They were always outside coming in for the wealth management side of Princeton. This was our 10 directors and our 20 incorporators. The 10 directors all live in Princeton, or Princeton, Montgomery, that area. The incorporators live within 10 miles of Princeton. So it was a very local group, and they did have a large amount of capital to start with.
From the time that you thought of this idea of opening a de novo till the time that you actually opened the doors, what amount of time did you spend?
We started, I left to come over as the president in May of 06. We opened in May of 07, a year. Yeah. That was quick. That was quick.
Just under your regulatory applications alone, I would have thought it would have taken longer than that.
Regulatory took, we put our application in, let me think, April, June, probably in July, and we got approval in February, from sort of start to finish. And we were very lucky because there was a number of banks in the queue in front of us, but there was a focus on getting them all accomplished by the end of last year. Right. And we heard that people that came in after us are finding it longer, and the FDIC is not working as fast. But there was some degree to get everything done by the end of 06, get them all locked up, and we were the last ones to go in that group.
How you doing?
We're doing pretty good, actually. The biggest challenge, as John mentioned, is how do we keep growing our deposit base to fund our loans? And we're in a unique market that we're the only community bank in Princeton right now, and there's some very good community banks to our east and our west, and maybe we'll learn in the next 2 years as we expand how good we're going to work with them. But right now it's a matter of just getting a deposit base and hoping that larger banks stop paying these artificially high rates to maintain deposits. With that, thank you very much. I appreciate everybody staying.
I just want to thank both John and Peter, and we have gifts over here for you so you can remember your memorable morning. And thank you both very much.
We hope you enjoyed this presentation by the New Jersey Bank Marketing Association. If you have comments or suggestions about these video podcasts, please send us an email. The address is steve@professionalpodcasts.com. You can also send us an audio comment by calling 856-861-6146. We produce these programs in the studios of Professional Podcasts in Cherry Hill, New Jersey. For the New Jersey Bank Marketing Association, this is Steve Lubetkin. Thank you for joining us, and take good care.